Your problem isn't the market. It's that you don't repeat the same setup, the same consistent setup and system for long enough. Consistent trading comes from mastering that one setup. Tell you what, let me show you how. Ladies and gentlemen, fellow traders, friends, it's easy to master one setup when it's kept simple, when it's not complicated. When you uncomplicate everything, it becomes so much simpler to trade on these charts. And then it all just comes to that aha moment that trading is 50-50 and you don't need 3 million different systems to work with. Don't forget, trading is risky. Most traders do lose money. And if you don't like losing money and you don't like risk, you know what to do. You probably shouldn't be trading. Now let's go and have a look at these charts and let's go and see what system you can use to actually make some money in the markets. I'm going to take my little picture here, move it up into the middle, move it up out of the way, make it nice and tiny so that you can actually see the charts and we can actually deal with the charts. Consistently achieving trading wins hinges on mastering that one strong trading setup that you can win with on a regular basis. What I normally do, of course, the easiest way to trade. Now remember, the charts are only here to manage your trade. What if trading wasn't about indicators, predictions, or guessing? Did you know that charts can't make you money? Did you know that charts can't predict the future? Did you know that you can't predict the future? And neither can I. In fact, no one can predict the future. Let me explain. Charts, win rates can't make you money. Charts can't predict the future. I can't predict the future. You can't predict the future. In fact, I don't know anyone who can actually predict the future. Maybe you do, or maybe you're a fortune teller. I don't know. But if you're not, then you're going to have to understand that every single time that you click the button on one of these trades, every single time you go, I know, I'm going to buy this, and then you go, I'm going to buy this, and then every single time you click that button, you got a 50% chance of winning, and you got a 50% chance of losing. And I know you're probably still struggling to get to grasp with that. And it's going to take you years to actually believe me or to figure it out or to go, oh man, that old man was so right. Man, I might be gone by then, but listen to me carefully. This is really important, and it's important to you. Look, I don't give financial advice. You know what I do? I tell you how my career went, what I learned through my time, and hopefully it can help you with your trading. I don't know. Maybe, maybe not. Most traders quit long before they break through and actually achieve the aha moment or figure out what trading is actually all about. Hey, for those of you who don't know me, I'm Rob. For those of you who do know me, guess what? I'm still Rob. You know, I've been doing this for a really, really long time. 34 years to be precise. That's a really, really long time. Let's go and see how you can actually follow one trading setup. Maybe you think I'm an old fool and you know everything and you've got it all sorted out because you did some magical course. Maybe you think there's a magic pie in the sky that's going to fall out of the sky and give you a magic system. But there isn't. There isn't. And win rates can't make you money. So what I normally do is I simply draw a resistance in and I simply draw a support in. Sometimes I draw it in with these fancy little blocks. Those are always nice, aren't they? Sometimes I'm just lazy and I just draw these lines in. But how do I do that? Well, it's really simple. My one setup is so simple that I don't overcomplicate it. First thing you need to understand is that trading's 50-50. Getting this through to people is insanely difficult because explaining it from a chair from this point of view to you guys who've been following the charts and believing in the charts, believing in a win rate, believing that you're going to make money from charts is near impossible. Also understanding what the 50-50 concept means. So I always try to explain it with a coin toss. If you toss a coin 10 times, do you agree that the high probability is that you'll land on tails 5 times, you'll land on heads 5 times? Generally, that's what's going to happen. That's the probability. And that's the probability that I'm trying to get across to you. That every single time you take a trade, no matter what you think your odds are, you may feel that on paper, you've got an 80% chance of winning. You think, I've got to win this. There's no chance I can lose this. I referred this to somebody on a comment with football. You've got a football team that you're watching. You think 80% of the chance on paper, this team is so much better than the other team. surely they're going to win. And then lo and behold, they lose. That's because every single game that starts, no matter how good the team, each team's got a chance of winning. And guess what? Each team's got a chance of losing. And the same goes for your trading. You've got a charting system, you've got a probability system, you think you've got an edge in the market because you believe in your system. But at the end of the day, when you click that button, you have a chance of winning and you have a chance of losing. Just get that through your head, and then you'll understand that you're actually going to lose some trades. So what's the trick to this? First thing you need to draw in is, where's my support and resistance? Okay, I'm going to take that out. Now, it really doesn't matter what this is. I'm just showing you on this chart, because no matter what the product is, whether it's Forex, whether it's crypto, whether it's indexes, it's always going to be the same, even on shares. Don't let it worry you as to what you're trading. It always remains simple, and it always remains the same. Why overcomplicate it? Why have millions of lines on these charts? You don't need them. You absolutely don't need them. So then what I'll do is go to the day chart. And why do I go to the day chart? Because the day chart gives me much more information. Now understand that this is not where the money's made. The money's made in the business plan and the strategy, which we're going to go to in a few minutes. We're going to go to the strategy, and then you're going to learn my cheat code. You're going to learn my strategy and exactly how you can make a profit in the market. But what I'm showing you now is the system that you can manage your trade with to get to that point. That's what we're showing you right now. And we're showing you the best, most simple way to do it, because at the end of the day, you do not need a complicated system to get to that point. All you need is to take the trade. The most important thing is to be able to just simply take that trade. And how do you do that? So we go to the day chart and we say, well, on the day chart, and what I like to do is often just make it a little bit smaller. And what I'm seeing on this particular product, firstly, and you can download these off Google, by the way, patterns, head and shoulders, black patterns, and all these different things that are available in the market. So when I've done this, what I've seen immediately is a head and shoulders pattern on the support. Oh, goodness me. If you know what a head and shoulders pattern is, then that's great. If you don't, what it is, there's a shoulder here on the line. There's a head here on the line. There's a shoulder here on the line. When it breaks below that shoulder, it should run the distance of the head, which is down to around this level down here, which means this could be a very short trade, not a long trade. As you see, normally what you would do is you would trade long on a bounce off of the support with a nice green candle, perhaps back on a retest and up, and then hope that it gets back up to the resistance. But when you see a pattern like a head and shoulders, use it to your advantage and say, ooh, that's actually there, so perhaps I should keep an eye on that. Now, I don't want to overcomplicate it and start going into patterns and that type of thing. You can keep it simple, but try to unlearn these patterns. Try to download a page with these patterns on and try to understand them, because they'll help you when you spot them in the market, when you're thinking of taking a long trade off the support, and then you see the big head and shoulders, which is preventing you from doing that. So then I draw my support in there. Now, I don't draw millions of supports in. What is the point of drawing a support here, support here, support here, support here, support here, support here? I mean, all the way down to the bottom, because all it's going to do is confuse the hell out of you. You're not working with those lines. You're working with these two lines at the top here. In fact, you're working with one line, and I only work with one line at a time. Why do I need to work with all the other lines? There's really no point. Should I draw a resistance right at the top there? No, it's still got to go through this one before it gets to that one. I'll have a relook when it gets to that point. But at this point, I'm working in this general area over here. So I don't need to move any lines around up to the top here or down to the bottom here. This is my main concern. That's my main concern. Nothing else. These lines shouldn't even be here as well. They're probably here from the deep past, and that's fine. There's quite a lot of stuff here from the deep past, but that's all fine. So now what I've got is this head and shoulders, which tells me it's bearish. If I make it bigger, what have I got? I've got a hammer candle upside down, also telling me it's a little bit bearish. Perhaps this could go down. Bit tricky there. That could be a problem. You never know, right? And then if you want to, you can even go up to the weekly and say, what's happening on the weekly? Oh, looking very bearish there. So now what's that told me? It's given me a whole bunch of information. What I use in conjunction with my trading is a trend line. I like trend lines. Trend lines are useful to me because I'll take a trend line, I'll draw it through here on 3 touches, and say 3 touches is a good trend line, and say it's actually broken that structure there on the weekly chart, which means on the weekly chart, that's bearish. We'll delete that. We're not going to take that with us, because if you take the trend line from the weekly or the daily or the monthly, it's just going to be a big line on your 4-hour chart that you can't really see. Now go back down to the daily and say, okay, so what do we got here? Because here we've got a slightly different picture to what we had on the weekly. What we've got here is it's lying on support. It's quite strong lying on support. Best case scenario is you would be looking to see if the long trade was to break that trend line and go to the upside, which in all likelihood with the head and shoulders here probably won't. But if it does, that would be a bullish trade. What you're looking for here is if it breaks to the downside, giving you the bearish trade. Now let's go to the 4-hour that we trade on. So now for those of you who know me, you'll know that I trade on the 4-hour. Why do I trade on the 4-hour? Because 5-minute charts, 1-minute charts, 15-minute charts mean that I have to sit here looking at charts all day. And why would I want to do that? I don't want to do that. I've got plenty of other things to do, like go down the beach or go and have lunch or enjoy my life. No, I don't want to sit here and look at charts all day. I've done that in the past. I did sit and trade 5-minute charts, and believe me, what's the point? There's no point in it. So you'll say, oh, I'm going to come in for 2 hours and I'm going to trade for 2 hours on these 5-minute charts. I'm going to get in the 5-minute charts, and you know what I'm going to do? I'm going to come in, I'm going to trade possibly 2 hours, and then I'm going to make a $200 profit, and then I'm going to go and relax, and that'll be me for the day, and that'll be me out of here. I'll be gone. I won't be bothering further than that. That'll be me. I'm out of here. And then you come in for that 2 hours, and instead of making $200, what do? You lose $400. Now what do? You don't go home after the 2 hours, or you don't go and do your thing after the 2 hours. You try and get that $400 back. You end up sitting in front of the computer for 16 hours anyway, because you're constantly trying to get the money back, and you end up losing $800 or $1,600 instead of winning $200. So that doesn't really work. If you do lose $400 today and you say, okay, I lost $400, I'm going to go home after the 2 hours and come back tomorrow, trade for another 2 hours, and then, but tomorrow you have to make $600. No, actually no. $800 to get it all back, because you've got to make today's $200, you've got to make yesterday's $200, plus you've got to make the $400 back. Ooh, it's getting tricky now, isn't it? Now it's starting to get a little bit out of hand. I trade the slow way. I trade the easy way. I come in, I look at my trades, and I say, I need to take a trade in the morning, and I leave it in for the day. And then I come back and manage it later on and see what's going on. So you'd come in, now that same trade that we were looking at a moment ago, here it is. Now we're looking at it, we've got the big head and shoulders, and you'll see it much more clearer now because you saw it on the daily. There's your head and shoulders, it's there. So at the moment, if it bounces off the support and goes up, if it breaks the shoulder here on the height, then it's bullish and it is going up. So you could say, well, you know what, if it changes direction and it does break this to the upside, then I can look at it and say, well, if it goes green and goes up here, I can actually look at the trade. If it breaks that level there, then perhaps it will be a bullish trade. Or if it goes red and it goes below that support, then it's a bearish trade. That is as simple as I keep my trading. That's how my trades are managed. We have a trade here on the US dollars ZAR. What have I done? I've got a target up here by the green resistance line. That's my target. I've taken my stop loss, moved it up to above cost. When that red line comes down, if it hits my stop loss, guess what? I get out for next to no profit. I lose all that profit. Oh no, but I haven't lost anything because my stop loss was way down here, $1,000 down. Now I've taken it up to cost plus a little bit. I'll make $41 if it wins well, fully for me. And then, but I won't have lost anything. So I've moved my stop loss up. If that turns around and carries on going up, like I would like it to, and it carries on and it makes a profit, keeps going up, then of course I can move my stop loss up further, keep following it up until it gets to the profit, in which case I'll move the profit away and keep moving it up. The one thing you don't do is dollar cost average to the downside, or try and move your stop losses away or something to that effect. What you got to do is always try and follow it up. It's easy. It's a 3-step business plan. It's the easiest thing in the world. We trade 3 ways. We trade in a range, we trade in a trend, and we counter trade the trends, and we counter trade support and resistance, breakout, breakdown. That's it. End of story. Our business plan is 3 steps. Choose a stop loss, choose a target, manage the trade. It's easy. It's not complicated. Now that you know everything, now that you know all the abbreviations, now that you've done all the courses, now that you've watched that, now you're a trading genius. Now you know everything. Now you're going to overcomplicate it and go completely insane. This may sound insane to you, but here we go. The idea behind trading and charts and all these complicated little stories and these little complicated little indicators and complicated little systems going to work for you. They aren't going to work for you. This may sound insane to you, but it's true. You see, the whole problem is you get all involved in the technicality of it. You get all involved in the possibility of taking $1,000 and turning it into $1 million, and it just doesn't happen. It takes years to become an experienced trader. In fact, it took me 10 years to get the aha moment. I followed charts. I believed in win rates. I believed in all those things that you believe in probably right now. And then it struck me when I kept seeing the saying, you need time in the market. You need time in the market. Well, then I realized I need an investment account. I need to start an investment account, which I did. And I really am glad that I did. By the same token, I thought, well, how do you apply this to trading? Because if you can only win with time in the market, how do traders win? And I came across the whole point. And the point is so simple. It's a 3-step business plan that I put together that is as simple as this. Make more on your wins, lose less on your losses. The first step is keep your risk the same on every single trade. So choose a risk amount for your account. Let's say you've got a $100,000 account. You choose a 1% risk. That's $1,000. In other words, you lose 10 trades. You're going to lose 10% of your account. You're not going to go broke. Also, you've risked 1% of your account. You're only going to lose $1,000 on that particular trade. Keep that the same on every trade. No matter how good you feel about the trade, no matter how much you think that trade's going to be better than all the others, keep the risk at $1,000 on every single trade. Unless, of course, you've got $1 million account, then it's $10,000. Or maybe you want to risk 2%, then it's $20,000. I don't know. This is entirely up to you. All I say to you is make sure you don't change the risk amount, because the minute you change the risk amount, then you have no idea what the platform is, how much you're going to lose, exactly what your business plan is going to be, because your losses are going to be all over the place. You want to keep your losses the same, but how do you do that? Well, firstly, when you identify a trade, look at the trade and say, that's the trade I want to take. Look at where the stop loss is going to be first. Then determine, okay, that's where I want my stop loss because it's an invalidation area. If the trade gets there, I'm not going to move my stop loss. I'm not going to get involved in it. As far as I'm concerned, if the trade gets there, it's a lost trade. Then you put your stop loss there. Then you work out $1,000 back to the cost. How many pips, how many points, how many contracts, what am I going to need? All the way back to the cost. Then you make sure that you can make more than $1,000 on the trade. Goodness me, make sure you can make more than $1,000 on that trade. In other words, make more on your wins. It doesn't have to be 2-to-1, 3-to-1, 4-to-1. On average, you'll find some of your trades are 4-to-1, some of your trades are 2-to-1, some of your trades are 1.1-to-1. But at the end of the day, you'll average out probably at around 2-to-1 anyway. So just work with it. Just make sure you can make more on the wins. Some of your wins will be less than your target because some of your wins you're going to get out early, or there's going to be a trailing stop that gets taken out because you're going to manage your trade this way. That's part of the plan. Don't worry about that. Just consider that as, okay, that's part of my business, part of my lost trades. My winning trades are the ones that I run after, the ones that are winning, the ones that are running. Those are the ones that are really, really important to me. Those are the ones that are going to make me all of my money at the end of the day. So the third part of the plan is when your trade goes into profit, take that loss, move it up to cost, because now the trade's free. Now it's not costing you anything. And then follow your trade up and keep on moving it into more and more and more profit. When it reaches the target, move the target away. Try and make more profit. Move the stop loss right up to the target. If it comes back and takes it out, so be it. You've made a profit. If it doesn't, it makes you much more profit and you become a winner and you make loads and loads and loads of money. Think of it this way. You've got 12 trades. You take 12 trades. Buy, sell, buy, sell, buy, sell. You've got 12 trades. You lose 6. You lose $6,000. Oh, Ina, ouch, I lost $6,000. Let's say you win the other 6 and it averages out at 2-to-1. Then you make $12,000 on the other 6. In my limited maths, that proves to be a $6,000 profit. And that's what's going to make you the money at the end of the day. And that's what's going to make you the profit. Not the charts, not the squiggly lines, not the little course, not the little systems. Those just give you the ability to take a trade, to manage your trade, and to work with your trade. On that note, if you've enjoyed the video this far, don't forget to subscribe and also, of course, join the members area.
Hey, if you're interested, come check out my members area.
Yeah, the members area is great for the community. It helps with these videos, and we give you the trade of the day every day, and there's lots of information down there. I'll even do trade research for you sometimes. If you ask, I can help you. And if you come to the live shows and you ask in the chat, I'll give you the assistance that I can give in those areas. Just remember, nothing I say constitutes financial advice. I'm not here to advise you. All I'm doing is telling you how my career went, what I learned from my experience over the 34 years, and maybe, just maybe, it can help you somehow in your experience. Thanks for watching. Till the next one, don't forget to watch all the last videos and join us for those live shows. Cheers, ciao, and bye.